Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Dennis said it on the pre-market show. He said maybe don't make it the title of the show, but I did. From Piss to Bliss. So not exactly sure still, at least I'm not, what Jerome Powell said yesterday. That was so awesome. I guess he didn't use the word patiently is what they're saying, but whatever it was, the market loved it. So forget the bearishness from yesterday. It's all good now. And we'll talk about what yesterday's Green Day means going forward. We have a number of interesting earnings reports as well. Salesforce and Gamestop and Campbell Soup, a few others, and Kronos getting the big upgrade of the day. Moving pot stocks, we'll talk about that as well. Today's guest, a new one, Jake Parks. He runs Behind the Bid, a show on YouTube. He would join us later in the show at around 8:40 or so. Joel, what is the word here overnight?
Green up 15.5 handles, made a pre-market low just under your high from yesterday, 28.06. That is your current low. And high, 24.75. We backed off a few handles off that. I am honest. I have honestly no resistance until 28.42. There's nothing. That's the next tick should be 28.42. Crude down 58 cents. Crude has not been participating in this rally. Current low of the move in crude comes in the 52 handle. Your 3-day low comes in at 52.11. Gold up $11 at 1339.70. Don't look now, but gold is at its highest level since March here. Some big updates in the gold market. Silver still under $15. I actually just shorted here. It just won't go up. That's up 7 cents at 14.84. And in the green by $155 is Bitcoin at 77.85. Triple D, let's see, in the chat, the first thing, Dreadhead Locks says he loves the title of the show.
We got a little bit aggressive with it. We usually don't cuss, but I felt it appropriate here today because this market was in the gutter and it is now back. And one day, everything changed. It looks to be like that was when we had that tech wreck 2 days ago, which we talked about on the show yesterday morning. It looks like those are going to be the capitulation lows when Amazon lost 100 points, when Facebook was down $14 or $15 there in one day. It was just a washout, and you did see rotation still happening, keeping us up, but it looks like that was the low. At least temporarily, that was the low until we get a next Trump headline that says, "Hey, we're nowhere near a deal and we're not negotiating," or something like that. That would be not good. But so we're still headline dependent, but the technicals look a hell of a lot better.
Oh yeah, what a difference a day makes. Strong close, follow through after the close. Jacked it up here, up 16 handles, 28.21. So, well, let's get to some individual news on stocks, and Spencer will take it away with that.
Okay, let's start with the one that just came out a couple minutes ago. American Eagle just had their earnings come out at 8 a.m. here. The Q1 adjusted EPS 24 cents versus a 21-cent estimate. Sales of $886 versus $854 million. So an EPS beat and a sales beat for AEO in the first quarter. And that's it. Oh, and they gave some guidance as well. The Q2 EPS guidance was a couple of cents light.
Good enough. That's the problem. That's the whole thing. This thing has been absolutely murdered in May, from $24 down to $17. They didn't say anything disastrous, so that's why you're seeing the stock lift a little bit here this morning. It lifted ahead of these numbers, obviously, with the overall market rally yesterday. But again, that's reporting on the right day. I mean, we said it yesterday with Tiffany's. Those Tiffany results we said in the pre-market show were not great. The stock fell $5 on those, but then turned around and ended up going green. Why? Because everything was getting bought yesterday, and they were buying dips. Just reported on the right day. If I would have reported on a day where we were down 300 Dow points, it probably would have been down $10. So it matters a lot more than what day you're reporting on than the actual results themselves sometimes. And if it's wishy-washy results, you sure as hell hope that the market's having a good day. If it's wishy-washy results and the market's having a bad day, stock is likely to have a bad day. But they were buying everything they could yesterday. They were buying dips. Certain stocks don't get bought, and GameStop is going to be the exception, which we'll get to in a second, because GameStop is, in my opinion, not going to survive, but which we've been talking about for a long time. But or maybe that should be a segue. And give us some levels on AEO first,
Easy.
and then let's jump over to the
level. You get too confused when I give you too many.
Don't give me too many. I don't want too many levels. I don't like 25 numbers. I want one good number.
20 and a half.
20 and a half. So you think it's got another 50 cents in her?
Well, it did trade there. Okay. It did trade there in the pre-market trading, and you got a pair of highs at that level as well. So pre-market high confirmed with daily highs. Boom, a double top there from May. So boom, got to get there, got to get over there, get into the 21 handle. You don't get up to 20 and a half and take that out. I'm looking for a fade.
All right, GameStop. This one
disaster of the day, which was probably predicted to be the disaster of the day. The one stock we've gotten right the whole time on this show. We've hated it forever. We continue to hate it. I didn't like it at $30 and like it at $20 and like it at $15 and like it at $10. I still don't like it at $5. I have no interest in getting long GameStop ever. I think the writing is on the wall for this stock. They cut the dividend to 0. So if you're in there for your 20% yield, it is no more. You're no longer getting a dividend. The stock has all kinds of problems.
I was wondering, just looking at the numbers here, I was just like, is GameStop really, like, were the expectations just so out of whack, or is GameStop really that bad? Because
you know what it was? They cut the dividend to 0.
Yeah. Okay.
People were sitting there. There was people that were hoping, I'm still getting paid 20% yield now. I think this dividend is safe. And they just, got slapped in the face. It wasn't safe. It's probably never coming back. I mean, unless this company can completely recreate itself, and it's difficult when we're going to a free-to-play model and you sell video games. That is not a recipe for success. That is a recipe for disaster. I have no idea how to fix that. They probably have no idea how to fix that. The market thinks they have no idea how to fix that. And that is why the stock is now a $5 stock. And I think all rally is still to be sold until this thing can prove, or until they come up with a plan to change their business model. This stock is in a lot of trouble.
So the numbers are what they are. 7 cents versus a 3 cent loss estimate. Sales 1.55 versus $1.64 billion. Comps for the quarter, or they guided their fiscal year comps down 5 to 10%. Like you said, they cut the dividend. Ironically enough, we're going to get the future of this industry in a couple of days here. E3 starts Saturday, I believe, and there's going to be some events before that, and it's like the biggest video game event on the calendar. And Google is going to unveil or offer more details about their cloud-based gaming service. So will Microsoft, likely. So, and the gaming on the cloud, that's the future. So, like, you'll never have to go into a store ever again if you not that people still go into GameStops, clearly, but the future is on the cloud, not in the store.
That's it. It's brick and mortar. This is just the changing business model. It's like Blockbuster all over again here. This is Blockbuster Video. And we saw what happened. People are, will cite the cash. People cite a lot of things, but eventually Blockbuster was gone. So, this feels like Blockbuster Video all over again. If the company can change it around, I'll change my opinion. If they can come up with a business model, a different business model, they're selling something different, and I don't even like the brick and mortar. It's a mall-based retailer. I mean, just everything is not to like about this. So I don't care how much cash they have. I don't think they're going to.
What are they going to do with it? What are they going to do with the cash? I mean,
well, they're going to burn it. They're probably going to burn it trying to figure it out. I mean, did they make money this quarter?
Yes, 7 cents, I think.
Eventually, they're going to start losing money, I think, though. I think the writing's on the wall, because if you look at that earnings trend, it's eventually probably going to go red. So I don't know. I don't know how you fix it. So I can't see coming in here and buying this because they have $1.6 billion in cash, and I don't know if that's true, but that's what Hunter was just saying. I can't see that being a reason to come in the stock. Everything is too broken. So, that could have been a reason for you to come into the stock at $7.82 when it had a dividend. You just lost 30% on your money. Could this thing rebound? Yeah, but they got to change everything that they're doing. And I don't know if they know how to do it. And I don't think the market knows. I think the market is calling that out. And I agree with the market.
Speaking of Blockbuster, though, I learned yesterday that the last Blockbuster is finally closed. There was
Gone forever?
there was one in Alaska and there was one somewhere else, and they finally closed earlier this year. I didn't know that. So if you were looking for a Blockbuster, they're officially now 10 years after the fact, all gone.
What was
Every Blockbuster is gone.
What was
And
the symbol?
here, the GameStop could do the same thing. I mean,
remember the symbol?
BBI.
Yep.
All right.
There was actually two of them. There was BBI and BBI.B.
Yep. And Jimmy A wants to know if you'll buy it for a penny.
No, I don't think I'd lose a penny. Unless, like I said, prove it to me, GameStop. Come up with a business model that can be successful with a free-to-play when everybody's going free-to-play. Come up with it. We challenge you. And you know what? I'll change my opinion on it. Until they come up with that, I'm out. It's your stock sold to you. So is it going to have little, would I want to short it at $5.42, 30% of the whole? Probably not, because there's, risks, there's short squeeze, all kinds of stuff going on. I'm just out. It's not going. I don't want to be long it. I wish I was short it. I've been bearish the stock forever. Obviously would have made a lot of money if I was just shorting this thing and forgetting about it. Probably what I should have did when we started getting bearish this thing. And we've been talking about GameStop in the show for years. We started talking, if you could scroll back, and the show's been going on for 4 or 5 years. I mean, we didn't like this at $30. We were talking the same thing. It's $5 here now. So I wish we'd been short it, but you got to pay the fees too. I don't know what the low, how much is to borrow. So and I've never really, I don't really put on long-term shorts either. I'm an investor long-term. I've traded this a lot of times, but obviously, the shorts have won. At least they've been winning for a long time, and I don't see it turning around anytime soon.
539, a pre-market low, and then the all-time low is 430. But someone's bringing in a short here, just a little bit here. Maybe you get a weak open, flush it back under 5, maybe a few bids under 5, and rally back. But there's a good report. Didn't Salesforce.com have a good report?
Oh, they couldn't have a better report if they tried. Probably. Salesforce Q1 adjusted EPS 93 cents versus a 61 cent estimate. Sales of 3.73 versus $3.68 billion. So they beat handedly on both Q1 numbers. They also raised their fiscal year guidance. The EPS was raised on the low end from $2.54 to $2.88. Sales was also raised by a hair. Q2 guidance was actually, the Q2 EPS guidance was a little bit light, but the fiscal year EPS guidance, they raised it. And overall, just a great report.
Stock was wild on this report, and I had it in my head by the pullback, and somehow I didn't. It was wild. It got a rip up to 155, and bring it up, Joel. It was crazy. No liquidity. The thing fell all the way down like $147, and I'm like, oh, I've got to buy this, but I just couldn't pull the trigger on it. And within seconds, it's back up at 153. That's up at 157. That's back down to like 151. Then it starts climbing again and gets up to like the 156, 157 area. But this thing was absolutely wild on the initial report. So, and the reason, I had in my head to buy it was because sentiment had totally turned that day. And we talked about it in the pre-market yesterday morning. If the stock remain hot, this could be a dip to buy. If the stocks go cold, this is going to be a rip to sell. Stocks remained hot overall. It gave you the dip. If you were out there, you had to have your order out there. It was so fast. And I didn't have the guts to do it. Maybe some people did. Congratulations if you did, because this thing kissed in the 146 handle on these numbers. And whoever bought that is up 10 points already.
You did. You did get a quick dip to 146 even. That's your pre-market low. I don't think we'll see that. Pre-market high comes in at 158.35, and I like that level based on the fact that you had a couple highs in the 158 handle, right around 158 on May 21st and May 22nd. So if you want the big old, 10-point update, you're going to rally up to 158. You're going to clear 158, 158 and a half, 159, 160, and just keep on going. But you're $2 away from that 158. I think first time it will be resistance. Where to buy this on a pullback, that's a tough one.
All the cloud stocks are going to be the hotter stocks. I mean, everything's hot today. We're up significantly in the market again. But think about the Splunkster, SPLK. I mean, you can go through the whole list. They're all trading up here this morning. Adobe. So it's helping them. But it's not a crazy move for CRM. So it's not like, whoa, CRM's up 10%. They're all going to rip. CRM's up 3.6%. So put it in perspective. The market's up. The Qs are up. everything's, it's happy days here again, at least in the markets, at least in the short term here. The question is overall, is this, a rally, just a counter trend rally, or is this something significant that a bottom was put in yesterday and now these markets going to start to storm back to the highs? Impossible to know that. And SP is selling off right now, Joel.
Just a tad, 18 and a quarter.
3 points we just fell. Somebody say something. This is
ADP
headline market.
This is
Very hard to trade to anything technically. Headline markets.
ADP payrolls up.
Oh, ADP data.
Yeah, ADP data. So.
I just assume it could be that every time I see a movement, I was like, did Trump tweet something? Did he tweet something? Did he say something? Did China say something? I'm like paranoid here. Paranoid trading.
Did Mexico is going to start a trade war with China, I heard.
Who knows? It's just trade wars for everyone. You get a trade war. You get a trade war. You get a trade war. Everybody gets a trade war.
Dennis, what about these interest rates? I mean, that reason for the rally yesterday. Is it now that the China tariffs are going to lead to a slowdown, and because of the slowdown, we're going to lower interest rates? Is that the thing? Is that what I'm missing? Because it's with unemployment under 4%, they're going to lower interest rates. I don't get it.
I don't really get why they went so dovish either. Here the Fed was hawkish, and we obviously had commentary in December when the market got the crap beat out of it, down 20% basically in the month of December, and that's when the Fed threw in the towel and got a little bit dovish all of a sudden, and that's when the market ripped. I mean, now we've went full, like we were talking about rate hikes this year. Now we're talking about rate cuts. I don't really know what happened either. Like what happened that the Fed changed everything? That they've all of a sudden, are they that nervous every time the market pulls back a little bit? Like you can't have a 3-4% pullback here. We've got to defend it. Is that what it is?
Is it Trump?
I don't know.
Is that it? I mean, I can't believe they would acquiesce to that. Who's our Fed expert? Do we know? Do we have one? We used to have.
I mean, who is really a Fed expert? I don't even think the people at the Fed are Fed experts. I'm not sure such a thing.
There's a quote for you.
I'm not sure such a thing exists.
I like that quote. I don't even think the people at the Fed are Fed experts.
Yeah.
How about Dr. Mikhail Melnick?
Yeah.
What
about Peter Schiff?
Yeah.
Oh, we'll get our Peter.
Let's get Peter back on. Remember Peter's on. He came on our show a couple times. He can get grouchy at times, but
are you going to say that to him at the event?
He is grouchy with us behind the scenes.
Joe, we should talk to Evan Schneidman from Prattle. Remember, they had the AI that analyzed the Fed speak and what it really meant. But I don't really know if anyone really knows. I don't even think they know. In any case, I guess the question of the day is who's going to lose more, GameStop or Pivotal? Because PVTL also getting crushed here this morning, and their earnings were.
We could have titled this stop. We could have made the title of the show instead of From Piss to Bliss. We could have been clean, and we could have said the biggest loser. And is it going to be Pivotal, PVTL, or is it going to be GameStop? It's a race. GameStop's down 29.8%. Pivotal is down 27.45%. Let's place our bets. Who's going to lose more today? Pivotal's thinner. So the smart money probably goes with Pivotal, but I just hate GameStop so much.
So Pivotal, both the earnings and the sales beat, but their guidance was bad. Guidance missed by a couple cents. They guided that they were going to lose 3 to 4 cents this quarter. Sales guidance in the mid $185 million range versus a $197 million estimate. The fiscal year guidance was also light for both EPS and sales. So light guidance is the kicker here.
Down 514 at 1340. 200,000 shares have traded so far. Pre-market low is low. It is just under where we're trading at. It's at 1280, and I believe that's like a new all-time low for this stock. Yeah, it is. So use 1280. 1280 is your level. If you're trying to cover short, you're 60 cents away from that. Probably some bids at 13. I'm gonna go with GameStop because on those big down days and stuff, it usually opens lower. It gets a little bit of a pop. The $5 level may be defended here. And
well, it's pretty. I'm fairly confident GameStop isn't going to just rip your face off back, but Pivotal's thin, so it could actually pop back a little bit. Who was the one that's beat up yesterday? Somebody popped back on a bad earnings report, thinner one. Yesterday morning, Mr. Israel, do you remember?
Was it Tiffany?
No, Tiffany came back, but it was thinner. And Tiffany's, it was something smaller. It was down like 20%, but then it started to actually catch a bit. It was like a team, like a box. Thank you.
Yeah.
Yeah, it was Box. And Box got the beats. Box had a disappointing report, but they turned around and started buying it. Now, I don't know if they can do that in Pivotal, but I'm fairly confident they're not going to do it in GameStop. That's why I'd probably go with GameStop as the biggest loser for today. I also get a 2% lead, but Pivotal was a story, and it's a story, and it's not completely broken like GameStop. So if you had to buy one or the other, I think I'm going Pivotal. But it is making new lows, and I don't like buying stocks making new lows. So
I'm probably buying it. Peeling back here, 9.75. I don't know. Was that a strong ADP number? So now maybe interest rates aren't going down? I don't know. We'll try and figure it out.
This market's hard to figure out.
Yep. Mid-range on the session, 15.5. We're right there right now. So if you're looking for a rally back up to the high, we should hold in right here at 28.15.
Campbell Soup raised their guidance this morning, so they beat on earnings and they raised their fiscal year EPS guidance by 5 cents on the low end, from $2.45 to $2.50. They did cut their net sales guidance by a smidge there, but an earnings beat and a fiscal year earnings guidance raise for CPB.
30.
Nice pop. Food stocks are in the gutter. So again, you come to expectations are super low for this company. Say anything right, we'll probably rip you up. I got to think $40. I did not, JV Spec, if you're out there, I didn't open up my other platform yet that's got the open book on it. So I got to do that. JV Spec, is there anything at 40 on Campbell Soup? Because it looks like a big number to me.
Pre-market highs at that level, 40, 50. And you have a high on April 15th of 40.22. So I like that level as well.
All right, that's kind of it for the earnings parade. There were a couple others, but
I want to just get away from earnings here. We've sold off 7 handles here in the last few minutes. So we're starting to leak a little bit. Facebook is in the red. Facebook, which was obviously ground zero for the ugliness yesterday. I mean, even when the market was rallying, Facebook actually made a new low from the previous day. It turned around and eventually found buyers. But man, that was ugly. It has turned into the red. We are starting to see some stuff roll over here. Not that it's getting, we're still up significantly here, but there's words of, caution still out here. I don't think this is, I think if you're put yourself in, just envision yourself. I always try to think of myself as a big money manager here, even though I'm not. I'm a prop trader. But if you're a big money manager and you've basically had the target kicked out of you the last month, and now you see stocks just coming back significantly here in one day. And some of these stocks, I mean, some of the rallies yesterday were fairly significant. Now, obviously, we're still way down from where we were, but this was stocks that probably got a third of their losses back from the last month. I mean, wouldn't you be a little bit inclined to maybe take some profits? So I don't know if it's, you've got that mentality, then you also have the other mentality coming in where, okay, yesterday was a low, I missed it, so I'm going to buy any pullback that comes in. So you have those two fighting forces here, and this is a very important day for the market. This market needs to hold on to yesterday's gains. It can't start going in the red, start giving stuff back. And, so far so good, but we are leaking significantly in the pre-market. We've lost about 10 handles since the high. So what are your thoughts, Joel? I mean, as an investor, put your investing hat on here for a second. Market's been down 6-7%, pretty significantly. Some stocks down 15 to 20% in the last 3 to 4 weeks. All those stocks were the strongest stocks yesterday. I mean, the U.S. Steel, which got downgraded by Goldman, was one of the strongest stocks. I mean, this is, it was basically a little bit of a short covering squeeze for anybody who was short. Plus, people just piling in, saying, "Okay, the bottom is in. I'm coming in."
With a long-term investor hat, I tell you, I'm as confused by this market as you are here. So for me, from my long-term perspective, I'm not adjusting anything. I know you're pretty stock heavy and you're pretty tech heavy. And so, these big declines, hurt you a little bit more than me. So it's like, to me, as long as the overall market is okay, I'm okay. I don't think we're blasting up to new all-time highs, and we're really in the middle of nowhere. I mean, really in the middle of nowhere. And you look at, I just think we're in a perpetual trading range here until some kind of deal gets done. I mean, we haven't fixed anything with China. We started a trade war with Mexico. They're going after the social media companies. I mean, it's just all the momentum of the market, and one way or another. So I don't think we're going right back to all-time highs, and I don't think we're going to 5,000 in the Dow.
It's hard to call. It's just a hard market to call here right now, again, because it's so headline dependent. It's so choppy. It's so much uncertainty still out here. Like I said, I think, if you, run all cash, you need to put some of that cash to work potentially here, but definitely not out of the woods. Yesterday's rally doesn't make us, and we're not suddenly out of the woods, but we look like we put in a short-term bottom. We look like at least we stopped going down. We had a relief rally. Was it just a relief rally, or was it the start of something more? That's still to be determined.
Yeah, you got a good eye there, Dennis. We are now not well under, but we are 13 points off the high mid-range on the session. We lost that 15.5. Let's see if we go red. I'm sure a lot of people would like to see this market go red today, the pre-market shorters. If we lose the close of 28.05, it could be just like it was on the upside yesterday. Just nothing. I mean, you looked at my sheet here, Dennis. You've never seen so many 1 stars. And 1 star just basically says this hasn't been a significant level. This hasn't been where we stopped in the past. This isn't a double bottom. This isn't multiple closes. So got to stay green. Important for the market to stay green. I think we could get back a couple hundred of those points from yesterday.
This ADP report is really bizarre. So I'm wondering what the jobs number will say when we get that. But the ADP report was to say it was a miss is an understatement. 27,000 jobs last month versus 180,000 estimates. So looking at a bar chart.
They missed by that much.
Yeah. So whether I don't know what was happening last month,
but that's good then. Then interest rates are going down. That's why the market rallied yesterday, because interest rates are going down. And why is the market going down?
Yeah. Go figure.
Right, Dennis?
I can't figure out this market. Like I said on the show yesterday, figuring this market out more than a few minutes is really hard right now. Headline dependent, choppy. And we just lost 10 points for fun. It's very volatile. Hard one to figure out right now.
All right, you know what we can do though, at least, is talk about the effect that analyst ratings have on stocks. And the big one today is Kronos. Always interesting when a emerging stock or a stock in an emerging industry like cannabis gets some attention from a major investment bank, and that's what is happening today. So in April, Bank of America initiated Kronos at a sell, underperform.
April what?
April 17th. And today, Bank of America coming back and uprating them straight from underperform to buy. Forget neutral. We're going from underperform and we're going straight
sell to buy.
We're going sell to buy. Price target raised to $20. And to date, this is the largest firm to have given coverage on this one. On the stock.
I mean, I can tell you that pot is hot. Pot is hot from yesterday. It was ice cold 2 days ago. All these pot stocks were looking terrible, and boom, they're back, immediately back. Huge rallies for them all yesterday, and now a big call from a major analyst on Kronos, and that stock is ripping up 8% here this morning, dragging up the entire sector here. Again, you can look at MJ, which is the ETF that Spencer likes to talk about. It's up 1.5%, but the other ones are up here too. CGC is up 2.8%. Aurora Cannabis is up 3% more. Afria, APHA is up another 3% here. They're all ripping up here on this note about Kronos.
And on April 17th, the stock was basically at $16. So $1.50 lower, they upgraded. So I'm not sure. The price action, I think that's a pretty quick move.
I mean, it's obviously a fundamental call.
Yeah,
so.
I mean, it's a pretty quick flip here. In a month, you did get a spike up to 16.18. Not too far off that. Let's see what we have on the dailies. On the dailies, you got a trio of highs right there. So there you go. Wait for that 1618. That's your first point of resistance. If not, look for the mid 16 handle. But those three highs in the same area, stopped it in the pre-market. Let's see if it can get up there in the regular session.
It's 8:30. Dennis, do we have any
I'm
imbalance?
trying. My system is just locking up here, and it's probably because I'm placing too many bloody trades. All right, we're bringing them up here right now. I knew you were coming to that, so I was trying to get it. Okay, no, the imbalances are all small. It's the same thing. Again, institutions not showing their hand. Why would you? 33,000 to buy in Square. Geez, sell balances there every day. It's 85,000 shares today. Pfizer 52,000 to buy kind of stands out from the big guns, but they are very small. Muted activity from imbalanced land.
Yeah, you've been saying that over the last couple days. So
well, it's been that way for a while. When volatility goes up, the institutions do not want to show their hand, and that's because everybody will make them pay more by doing that. I mean, you never want to show your hand to a certain extent, but one thing we haven't talked about is oil starting to get hit hard here again today. We had a nice bounce back rally in oil yesterday, but it looks like it's going to give it back here again. Oil has not bounced really at all when you can include today's sell-off. Bad data coming out at 4:30 yesterday knocked oil down. Oil is, if you're looking for a source of weakness here today, a reason to start to get more bearish, it's that oil looks like it's ready to break down again. Oil is awful.
Yeah, 52.11. That was your low. What's today? Wednesday. That was your low on Monday. 43 yesterday, 65 today. So you kind of get, I mean, as it stands right now, you got three lows within 30 cents. So let's just call 52. If you're looking to play this for a bounce, needs to hold 52. Do we have some data today? I believe we do. They have the Tuesday after the close and then also the Wednesday afternoon data. But 52.11 critical, $52 area holding for crude is important. S&Ps continue to slide here. Now,
yeah, it's getting ugly, just flat out ugly.
Yeah. Are you getting hit on stuff? You pulling the bids? Or
I'm sitting at my desk. I'm getting hit on stuff because I move. Oh yeah, I'm moving stuff continuously. That's why my train of thought keeps getting lost here because I'm trying to make so many trades every. I'm moving orders around like crazy. I'm almost at a point where I just got to cancel everything and readjust. So I am doing that. So I have no orders out there now, just because we've fallen so much. Because obviously, I'm doing index arb, so I'm trying to do a little. Obviously, when I'm on a radio show, I'm not doing it as much, but you got to cool it off a little bit here. But at the same time, you got to be, adjusting those orders and moving around for the positions that I currently have as well. I'm trying to wiggle out of stuff. If something's not down enough, I'll try to wiggle out of it. If something's up too much, I might try to short it. So it goes both ways. I'm always doing adjusting there, but it's moving. We've lost 10 handles since we started the show. So yeah, that takes some major adjusting.
And Spencer, we were doing some ratings. Do you want to stick with that?
Yeah, we can. There weren't a ton that I thought were notable. The Kronos was the big one today. What else do we have on the list? Roku is notable, an upgrade from Guggenheim to buy. Price target raised from 75 to 119. Roku trading up on that news.
Let's take a look at.
Yeah,
banks are all down too. Want something else to say? Since that ADP number came out, the banks all got whacked.
Roku trading up a couple bucks here. I make that $3. And will we make all-time high in that, folks? Keep an eye on that. 95.95. That's your all-time high. We are trading above it though in the pre-market session, but I don't know. It's not sure how much. 150,000 shares have traded, so nothing to shake a stick at. Looks like a new all-time high here in Roku.
What would you do with Apple here? Or I guess I'll rephrase the question. Was yesterday the bottom in Apple?
Yes. 2 days ago, 170. I think so.
Or 2 days ago, right.
Yeah. And, big reversal day. It's breaking out over 180. It's 183 this morning. Yeah, I think I'm a buyer. I own Apple, but I think if I didn't own it, I'd be a buyer of pullbacks. I think the bottom's in an Apple. Temporary bottom.
And why is it up today, Spencer?
Tim Cook told CBS News that the China trade war won't affect them. Yeah.
Don't they have an event going on?
Apple?
Yeah. Isn't the WWDC or something?
That already happened.
That already happened?
Yeah, that was a few years ago.
Okay. I guess.
Yeah, they announced what was it? Like $1,000 computer stand. So
$1,000 computer stand.
Yeah, something like that. So
must be a pretty cool computer stand.
I just want them to go back to making smaller iPhones because I don't want it. I mean, I'm due for one. Mine's like hanging on for dear life, but man, I carry it in my pocket. That thing is like, it's like carrying around an iPad in your pocket. Those things are huge. And everyone watches video. Do you watch video on your phone, Dennis? I watched the video you sent me of your kids yesterday, but are you watching TV shows and stuff on your phone?
Never.
Never.
Never. I mean, some people do that though, so I don't. Maybe we're too old school, Joel. If I was to watch it, I want to watch a sporting event, I will watch it on my TV. So
I feel like you guys missed the boat there on that.
What do you mean missed the boat?
Well, no, people aren't. Just to be clear, when you say video, it's like I'm not watching like the game on my phone. I'm watching the videos, like the video that Dennis sent you of his kids.
Yeah, I watched little 5-minute videos on my phone. Yes,
but do that 1,000 times a day, basically.
Oh yeah, I mean, and that's and the younger generation wouldn't even mind probably watching an entire sporting event on their phone. I mean, that's the way the generation is.
I've done it at a necessity, but yeah.
On a necessity, I would do it too. I would prefer, and we're traditional. We're older. I mean, we're not going to change our ways. When you start getting in your 40s and 50s and 80s like Joel, I mean, it's you're set in your ways.
70s, right? Because you go 55 and 80, just like no resistance at 56.
No resistance. He took that offensively, that 80 comment.
But I was actually ahead of my time because I can remember in the early 90s they had those little TVs, I had those little Watchman. And I don't know if it was a Michigan football game or basketball game, but Lisa had a friend's wedding. And I had to see the game. So I took the little Watchman, I still got it somewhere in my house. And I was watching the football game on, during the wedding. So I was way ahead of my time. I didn't create it at that time, but no, I mean, I just want a smaller phone. So that's it. We got our guest. We got a late guest today. It's Jake Parks of BehindTheBid.com. He runs a show that coincides with our show a little bit, so he's going to get done with his and come on.
The competitor.
He's a competitor,
nice.
But he's a nice guy. You know,
okay.
So he's a nice guy. So we're
and he'll be at the training summit.
And he's going to be at the FinTech Summit too.
Right.
And I think, what do you guys think about changing the name from Trading Lounge to Trading Floor? Because you think of a trading.
I like trading floor better too.
Yeah, like a lounge. You have chairs and drinks, right?
Yeah, you're relaxing. We're not relaxing. We're in a trading room.
It's gonna be a trading floor, just like the old Bright Days. I'll be yelling at Dennis because he comes in late all the time. Hung up.
Dennis says that as he's reclining in his nice office.
Yeah, look at me just chilling. I'm just placing trade. I always did this. Joe would yell at me, "Sit up straight, young whippersnapper."
All right, back to the market here. Any tickers you got? Throw them in the chat. And
yeah, it's a kind of slow day for like the big rally yesterday, huh? So if you guys,
I mean, there are movers.
Let's talk Tesla.
The problem is that I'm trading a lot, so
well, that's not your fault.
Everything on my list I'm not talking about because I'm trying to make trades. Since we've been on the show,
there are movers. I mean,
since we've been on the show.
All right.
I have placed or not placed. Let's just do a rough estimate here. So orders that are open partials and rejected, all statuses. Since we've been on the show, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13.
All right, we got 3 stocks.
I'd say since we started the show, I've probably put about 50 orders in there. So, manually. So it makes it tricky. Some days, you're not doing much at all when the show's going on. The market's not moving. I don't have to move for it. I'm moving stuff all around. I'm canceling them, repositioning. But, that's not even, seeing any automation. I even talk about automated orders. It's taken what I've just been doing, just clicking here.
AMD over $30, up 49 cents at 30.06. This stock, that 26 was like the Rock of Gibraltar. Is it
unbelievable
news here? Let's see if it holds 30. That'd be a big day trading up the pre-market. What's the news on it?
AMD this morning.
AMD.
There was a headline that they're expected to see rising shipments for their EPYC processors in the third quarter.
Okay. They're pricing AMD like AMD is going to have the entire semiconductor market. They're going to be the chips, and that's it. Intel, forget about them. NVIDIA, forget about them. AMD, it's all about AMD. Maybe that's the case, but they are pricing them like they're eating everyone's market share. Maybe that's true. And it's hard to argue with this tape. I mean, the stock has been relative strength. We talked about it. It's been the best performer. That 26 has been an unbelievable support level. We said it on the show too. It's hard to get bearish until the stock takes out 26. It could not hit the bid at 26. It could not take it out. And now it's rallied back up over $30. Unbelievable performer considering the shipwreck that we have had in the last month. So very impressive, AMD.
All right, let's get to our guest.
Well, I just wanted to say before we do that, someone's dropping in the chat the ticker IFRX, which is down like 85% today. They had some drug news, and
wasn't good.
And obviously it wasn't good. They're down 80%. I don't know what you can say about it besides, if you're going to trade it at the open, great, to pick up a few pennies. But there's nothing you can say about a stock that closed at $37 and is now six. If you're
short, you're Rochambeauing. I don't know, and it's just sitting there too, Dennis. What's the bid offer there?
What is the symbol?
IFRX.
Yeah, Indian Frank Ralph X-ray.
Oh, it's tight. It's a 4-cent market. This thing's 630 offer forever. Iceberg sitting there, not moving. Says, get me out. This thing is trouble. Yeah, it's $37 a share down to $6. This is the problem when you buy these one-trick ponies. And our Crystal Biotech, which I own, and I spent a few other people in the chat, it's the same thing. If the drug works, it's a home run. If the drug doesn't work, it's a 0. So that's usually how these things go. So, sometimes they bounce back, but more often than not, when these drug trials, and I'm assuming it's a failed trial. I don't follow the story. Failed trial?
Yes. They had a drug that did not meet a statistical significance.
Yeah. When you see these drug stocks, these one-trick ponies miss, and they go down 80 or 90% in a day, very rarely do they come back. Very rarely. I mean, we saw it with Sarepta was one that they had that vote, but the vote was close. It wasn't about the failed trial. It was about the vote. And the stock went, remember that day, Joel? It went from I don't know where it was, $30 and went down to $7 or $8 or something.
It went down there a couple times.
Yeah. So, but very rarely do you see these things come back. So don't go thinking, okay, well, how much can I lose? This stock was 37, it's 6 now. How much can I lose? You lose $6. So if you put 100 grand in at $37, and put 100 grand in at 6, you can lose 100 grand. So, and I think there's a higher probability you lose 100 grand now than probably before, because these things run into trouble. When the trials fail, a lot of these things do eventually drift down, keep lower, 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 and some of them do go to 0. I don't know if this one's going to be the case. I don't follow the individual story, but I never like buying a drug stock when it's down 83% because I'd say 9 out of 10 usually don't come back. And that's just a random number out of my head, but it feels like that.
That tattoo stock is pulled back too. That SOLY, when it got to 29 even. This was back on May 29th. It almost had a gap fill. See, still got another $1.50, but Luster's off that one again, trading up $1.30. We'll see if any people want to hit the bid on that. But let's go from hit the bid to behind the bid. Do we got Jake Parks here in the background?
We do. I want to bring him on. Jake Parks is the host of the Behind the Bid show on YouTube. Jake, are you with us?
Good morning, guys. Good morning.
How's it going this morning?
Fantastic. Thanks for having me on, guys.
Yeah, no. Welcome to the show. Now, we chatted the other day, and you said that you like to listen to our show. I know you run a podcast during our show, but when do you listen to our show?
Yeah, absolutely, absolutely. Definitely in the evenings. I always learn so much from your show. So I remember Dennis was talking about the options, the expected options move, and how in earnings sometimes the stock will go there and turn around. So I started tracking that, and really great. I love picking out the gems from your guys' show.
Okay, that's great. So what's your approach to the markets? Are you a heavy fundamental guy? Do you like technicals? What's your approach to the markets?
Yeah, absolutely. So I love a good story. I love to follow the stories in the stocks. And I think when you follow the news and when you follow the stories and the headlines, that helps you generate a lot of ideas. You know what you want to get long and what you want to get short. So from there, that's when you start to use the technicals to figure out where you want to get long and short and define your risk. So I love kind of getting up in the morning, doing the research, and that helps me generate different trade ideas. And then you kind of whittle those down as the day goes and enter or exit with the technicals.
Well, so what is their research though? Like what are you looking at?
Yeah, so I mean, Benzinga is a great tool, right? So that gives you the headlines of everything. So when you start to see what headlines are crossing, then you can start to see what other things should happen in a particular sector. You can start to look at the fundamentals of companies and see what sort of growth rate is priced into a stock, and when there's a readjustment for that expectation of a growth rate. So those types of things. Definitely also biotech news.
Well, so are you trading specific sectors like all the time, or do you just kind of go with the flow of the headlines in the morning?
So yeah, definitely so let's see, what's a trade recently. So recently we had Dynavax, DVAX, right? And that company had, they decided that they were going to actually restructure. They're going to lay off 30% of their workforce. And they were going to abandon one of their drug pipelines. And so when that happened, on the day that they announced they were going to restructure, also the CEO was going to retire. On that day, an analyst came out and said, well, we still like the stock. And so they they talked about their price target, which was much higher than where it was currently trading. And so what that caused was, in the morning, it caused the day trading crowd to buy the stock on this price target upgrade. However, there's so much bad news into the stock that it ended up closing down 15%. So stuff like that, where you have an opinion, but maybe there's a counter trend, like an analyst is coming out that's counter to you, which lets you get a position, build a position in that. Those are really, really nice trades.
So, like, what kind of time horizon are you trading with? Was that your question, Joel? Yeah. Sorry.
Go ahead. No, that's fine.
Yeah, I like to consider myself like a big picture day trader or swing trader. So I'm looking to get the meat of the move. I'm not looking to stare at L2 or stare at ticks during the day.
And are you like going long and short, or only one or the other?
Yeah, so mostly short. I think that's really when you talk about news and when you talk about what will influence stocks, a lot of times bad news hits a lot harder than good news. So if you're really bullish on a stock, I'd say you have to wait for a deep pullback, and those can be really, really great trades. But mostly I trade on the short side.
That's interesting, because you see a lot of traders that are primarily long focused, and rarely do you find traders that are primarily short focused. I trade market neutral, but I can relate to you, Jake. Remember back, Joel, what was it, like 2000 and 2001, when we were right in the tech bubble burst, and I was like, everything I was doing was on the short side. I mean, everything was shorts. And I think in our Bright office, everything was shorts there too. The one thing that is awesome about shorts is that you make money a lot faster when stock's going down. And what is it you used to tell me, Joel? There's always a buyer, or there's always a seller for a stock going up, but there's not always a buyer for a stock going straight down. Yeah. So, and that's why it's up like an escalator, down like an elevator. So, if you can focus on the short side and actually get some edges there, it's a lot of money.
How much do you focus on the overall market? I mean, there's obviously, headlines and stocks and the fundamental news, can affect the way a stock moves, but how much do you follow the overall market, and how much is that a factor in your trading decisions?
Yeah, that's a great question. So it really depends on the kind of the fear in the market, and it really depends on the market, what kind of news is hitting the general market. So we know today, right, there's a lot of fears with Huawei getting on the entity list, who's going to be next on the entity list. Those are going to affect semis. Of course, we've seen that affect Zillinox. We've seen that affect Skyworks. They reported today. We've seen that affect Qorvo, right? All these semi stocks. And now we have Trump talking about tariffs with Mexico. So this is, again, affecting the overall market, but also you have your individual stocks. It's affecting Chipotle. It's affecting Ford. It's affecting GM. And so, those plays really, they can affect individual sectors. And I think a good example of that today is Ambarella. Ambarella reported these kind of blowout numbers. And then immediately when it gapped up 10%, an analyst came out, I forget which one, and said, hey, don't forget that this company's biggest suppliers are about to be on the entity list, and they downgraded the stock. So still a lot of fear with those. So I'd say, yeah, definitely when it influences specific sectors. But in general, if you're trading individual stocks and you're trying to predict the market, then you have to predict two things. And that can certainly be a lot harder than trying to predict one thing.
And what else is on your radar for today?
Oh, good question. Well, definitely Rewalk, right? That is the one stock gapping up 180% on that. And they got an FDA approval for
What's
their
the symbol on that one?
RWLK. So that's a super, super tiny company. Yesterday it was a
Wow.
15 million market cap company.
Yeah.
Cool. And Rewalk got FDA approval for their Restore, which is to help people with stroke patients walk. So that's a really interesting story because they're increasing their total addressable market. It used to be they only serviced people with spinal cord injury, but now they can service the 17 million people who are affected by stroke. And but what you need to know about this company is that it's an absolute. They need cash, and it's absolute. They've been raising money every single quarter. So we know that this stock's gapping up 180%, but that offering is coming right around the corner.
Expect an offering in 3, 2, 1 yesterday.
Okay. Absolutely.
Yep. And what are you going to talk about at the event?
Oh yeah, great question. So I haven't written my speech yet, but I'm really excited to present at the Benzinga Trading Summit. It'll be the first time I'm speaking publicly about two stock market enthusiasts. So super excited about that. And what I want to talk about, hopefully this brings in a larger audience, is how to use fundamentals into your short-term trading. And so basically looking at how do you figure out how you want to react to a gap up, a gap down based on fundamentals, based on the company's valuation or some sector analysis, or historically what the stock has done, and tying those all together.
Probably a unique perspective. So Jake Parks, again, will be at the Benzinga Trading Summit June 20th. So check him out there, and I'll give you the links and all that at the end of the show. Jake Parks is the host of Behind the Bid on YouTube. Jake, thank you so much for the time, and we'll see you at the event in a couple weeks.
Thanks, guys. Yeah, really looking forward to it.
All right, have a good one. 8:52 here. Joel, tell me what's happening.
We're holding on to the gains. We're still up 7.5 handles, 27, 12, 50. Where'd that little dip took us to? Little dip just took us a tad lower than this, down to 27, 10.5. Really nothing there. I think it's a battle between mid-range at 27, 16 and staying green here. The close at 28.05.
All right, you wanted to talk about Tesla earlier. I cut you off, so let's talk about
yeah.
Tesla. What do you want to say?
What is going on? That's a big old rally in Tesla here in Europe.
Market effects.
Yeah, you think
They're
so?
buying everything. Yeah, 200. Let's see what happens. Last time it failed, they're coming right into it. It's going to probably test it. The easy money is probably to buy it at 197 and sell at 199.99 because it looks like when it's come this far, it's going to test 200 there again. So, keep that in mind. Sometimes easy trade is just to pick up the extra little bit that it's going. I think it's going to 200 today. What it does at 200 is going to be the question. I was saying it needs to get back up to 200 for the bulls to start to, get excited here again. Nice day for it yesterday. Was it just, a beneficiary of the overall market? I think so. So I think the story is still obviously, broken temporarily here, but I still have this feeling, that Tesla, Musk he doesn't like his stock down. I feel like he's going to do something to get, spark interest in the stock again. So I'd be scared to be short it just because I think the Musk is the wild card here. He doesn't like his stock down, and I think eventually he's going to defend it.
I saw a tweet. The thing is, he says so much you forget, right? And he tweeted in at the end of April that remember that in about a month they're going to be launching an insurance product. Well, it's been like 6 weeks since that tweet, and no word on the insurance product. But I don't know. He just says so much.
He says so much. You're right. Like, it's hard to keep up with this guy. Between him and Trump,
Can't keep up.
They talk so much.
The full-time job just to keep up with these guys. All right, 8:54 here. Got about 5 minutes left in today's show. Drop in some tickers and we'll talk it out. Was there anything else on your guys' list that we hadn't gotten to?
I have a huge list. I haven't even touched on any of it here, but I don't know. I actually had TiVo at the top of my list to talk about.
TiVo,
yeah. So interesting. Last night, bring up the chapter I was charting this one, Joel. So it comes out that they win this ruling with Comcast. What was this ruling? Give me the details.
All right, as I pull up the chart here, that Comcast was infringing on their patents, basically. So, and this was yesterday. This was at like 5 o'clock yesterday.
This is after the bell. It got popped up to 880, 890 on this. I was talking to my other buddy at Bright. I'm like, this is ridiculous. This is a stock that's hated. It's up this much on this news. I was like, I should just, like I'm like, I can't even stop myself. I have to short this. I shorted at 861, and I covered this morning at I think 7. So I think just starting here. Like I didn't short a ton of stock because it's scary to short a stock when it's going straight up. But I was like, I gotta take some action, and I covered at 777. So it was the easiest 80-90 cents that you can make. It seems like every time these dogs have these big rip your face off rallies that they're short-lived. I didn't think it was going to be that short-lived. And when I saw the market this morning, I was like, oh, maybe this Steve was going to show some life. You log in and it's offered at 8, and now it's offered at 777. And there's just too many people who are underwater in this thing, too much overhead supply, and they came in quickly to sell that pop last night. So low-hanging fruit was that one last night, in my opinion.
All right. Still trading up 23 cents here. Let's see if it gets back to unchanged here. Where did we settle yesterday? 744. Use that little support. And now that it's over a buck off its high here, I don't know, maybe $8. Maybe the offers will start stacking up at 8 here, but gave a lot back. Not a good sign here for.
No.
All right, tickers getting thrown in the chat.
Mattel had a huge pop yesterday too. Just before we go to the tickers in the chat, I want to talk about this one too. Gets booted out of the S&P. Then he got, so actually I could see it on 2 nights ago. I was like, they're going to buy this thing. I actually went long it, which I was like, I can't believe I'm going long a stock that's getting kicked out of the S&P. And I went long at like 970 or something. This was 2 nights ago. And we didn't get a chance to talk on the show yesterday. Reason I'm going long is just because it's crowded to the short side, booted out of the S&P, had a bunch of people that probably wanted to sell the thing. And, and those people are all caught. So it was a good reason to squeeze them. Anybody who came in at the open selling it, squeezed immediately. Crowded trades 101 here. Stock goes straight up. Media will always find a fundamental reason. And I laughed, when I was looking, at the media and they were talking about some, I don't know. Did you see the fundamental reason there yesterday? Bring it up. The media had it, figured out why Mattel was up. I think it was just a classic short squeeze yesterday with Mattel. Market was obviously strong too, so the market helped it out. But when you look at, Mattel's move, kicks it out of the S&P. JP Morgan actually giving it an upgrade here this morning. So it just oversold. It was oversold. And, is Mattel out of the woods? Is Mattel coming back? Am I going long in my long-term portfolio? No. But there was a trade there for a little short squeeze. I think the easy money is already made now on it from 980 to 1080. So I don't know what happens today, but it did get an upgrade from JP Morgan. So maybe
bought Hello Kitty.
I have a little piece left, but
they signed a licensing deal.
What did they say?
They signed a licensing deal with Sanrio to.
And they're trying to justify that was the reason for the pop, but it was already popping before that. It was popping. It was kicked out of the S&P. I don't know why. Things go into the S&P 500 and they go down, and things get kicked out of the S&P 500 and they go up. There's something with the ARB going on there, and I don't do that between the different, but there's, like BMS yesterday was the one that was going to go in, and it was actually trading red significantly. So it's funny. They used to be like, when a stock goes in the S&P 500, it used to be like, it goes up 4 or 5% on that. Not anymore. They typically go down when they go into the S&P 500, which is counterintuitive, but that's the way it's been working for years.
DD, someone's asking here about DuPont. I know we were, but I like it though today because we don't know what happened with the reorg. We don't have everything, but what I like, you got a level here and it's just as plain as can be. And that 76.50, You made a high on the day of the reorg, whatever, at 76.10. Then you made a high at 76.50. So back $2 off that. You absolutely can't start thinking about this stock on the long side until it gets back over 76.5 here. And we're quite a ways away from it. 65.50 might have been a little bit overdone on Tuesday, but yeah, let the dust settle here. But got to respect that resistance at 76.50. And then also LK. I know I pronounced, what did I say yesterday?
Luckin.
You
said it wasn't coffee. Luckin coffee. Okay.
Kitchen. You said kitchen.
There is a Lucky's Kitchen. I know I've seen a Lucky's Kitchen somewhere before.
This is Luckin.
All right, well, it's Luckin and it's coffee. But anyway.
Boom. Had a nice rebound. I had a 4 or 5 day rally. I don't know. This is kind of in the middle of nowhere. I don't know. See if it could stay green. 2011 was the close. Yesterday's low way down in 1906. I don't have a good feel on this one. Just feels like got beat up after the IPO, had a little relief pop, and now it's drifting lower again.
One more from the chat. Pinterest here.
Good old Pinterest. PINS.
I want to buy this. I do want to buy this. I want a reason to buy this. I'm trying to find the reason to buy this. I mean, it couldn't even rally with the market yesterday. But we talked about 2 days on the show. If you're looking at 2360, that would be the line in the sand for me. I mean, you could go to the all-time low there from 2305, so maybe you go to that. That's what you're leaning on. But so you're risking out $1.30, or pre-market's 24.50, so about $1.50 from that lows. I could see the setup. I want a reason to buy this thing because I think this is a story that could get kickstarted again, and it's in the gutter here right now. I kind of like it. Below $23, though, I don't want to own it. So I'll just say that. So it takes out, makes new lows. I don't want it. I kind of like it at 24.50 though. I like the risk reward here.
Frank has my back. Lucky Kitchen is a restaurant in Ann Arbor. Okay, so
he's still focusing on this Lucky Kitchen
stuff. And on that note,
Chinese food.
And on that note, that'll do it for today's show. I mentioned earlier about the Benzinga Trading Summit, June 20th, Sheraton Times Square. That's actually like around the corner from now. So only a couple weeks. bzprofit.com. The promo code PMP50 is back, I'm told. That's all caps, PMP50 will get you 50% off any ticket, including to the trader, what'd you say, not the lounge, the trading floor. The trading floor.
We're changing it to floor.
Everyone's going to have jackets.
We're changing it on the fly.
Executive decision.
The trading floor where Joel, Dennis, Jeremy Newsom, Anne Marie Band, Todd Gordon will be. So bzprofit.com, promo code PMP50. Thank you very much to all of you in our chat. Thanks to today's guest, Jake Parks. Please remember all the information on our show is meant for informational purposes only, not meant to be investing advice. Catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, Google Podcasts, or just rewatch the show on YouTube. And that's it for us. Have a good rest of your day, everyone. We will see you on Thursday.